See, dear friends, this question is talking about dear friends, Medco Limited during the financial year 24-25 received the following grants from the state government for its newly established medical center in a backward area. Grant 1 20 lakhs for providing free treatment to below poverty line residents of the area of the first 5 years. Grant to 40% subsidy partly fund the purchases is radiology machinery costing 15 lakh. Useful life of the machinery is 6 years. Depreciation on this machinery is to be charged. Medco Limited during the financial year. Medco Limited during the financial year 24-25 received the following grant from the state government for its newly established medical center in backward area. Grant 1, 20 lakhs for providing free treatment to the below poverty line residents of the area for first 5 years. Grant 2, 40% subsidy to partially fund the purchase of a radiology machinery costing 15 lakh. Useful life of machinery is 6 years. Depreciation on this machinery is to be charged on straight line basis. Assume nil residual value. Grant 3, 2 acres of land free of cost to set up the hospital. The fair value of the land is estimated to be 15 lakh per acre. Grant 4, 50 lakhs to open the medical center in backward area. No condition is attached for the incentive other than the situation. The medical center should be in backward area. How should Medco Limited recognize the government grant in its books of account as per applicable in the AS? Dear friend, here applicable accounting standard is 12. Answer. Applicable in the AS is 1 2. applicable in the AS is 1 2. As per India's 1 2, deferred tax is recognized on temporary difference between carrying amount of the asset or liability in the books and tax base of the asset or liability. As per grant and standard is 12 is accounting for taxes grant వచ్చేసి 20 20. See, applicable in the AS is 20. Sorry, I misplaced as 12 previously. Now I am withdrawing my words. And applicable in the AS is 20. The applicable standard in the AS is accounting for government grants and disclosure of the government assistance. Grant wise analysis we do and accounting treatment. First, let's take grant 1. The grant 1, grant 1. Okay, friends, we are solving this question. Grant 1. Grant 1 is 20 lakhs for providing free treatment to below poverty line resident for first to 5 years. Nature of grant is the grant related to income. Continues conditional upon rendering free medical services over a period of 5 years. Relevant in the AS provision. 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 According to para 1 and 29 of India's 20, grant related to income according to according to according to According to para 12 and 29 of NDAS 20, grant related to income, grant related to income shall be recognized, shall be recognized systematically over the period, systematically over the period, systematically over the period in which the entity recognize, in which the entity recognize, in which the entity recognize in which the entity recognize. See, accounting treatment, how you do accounting treatment. See here, for the grant one, recognize the grant as a deferred income initially. Recognize the recognize the grant as deferred income initially. Recognize the grant, recognize the grant, recognize the grant as deferred income, as deferred income, DFE grant. Recognize, recognize the grant as deferred income, deferred income initially, INITIALLY, initially. Amortize is to statement of profit and loss over 5 years. Amortize it, amortize, amortize amortize it to statement of P&L, profit and loss, over 5 years. Over 5 years. Over 5 years. In proportion to service rendered over 5 years. Over 5 years. In proportion to service rendered. In proportion to. In proportion to service rendered. Service rendered. Accounting amount recognized per year is equal to amount recognized per year is equal to amount recognized amount recognized amount recognized per year amount recognized per year is equal to 20 lakhs divided by 5 years. 20 lakhs divided by 5 years, that is equal to 4 lakh per year. 4 lakhs per year. Grant to 40% subsidy on radiology machinery costing 15 lakhs grant amount. 40% subsidy, 40% subsidy, 40% subsidy on radiology, on radiology machinery costing on machinery costing 15 lakhs. Grant to grant amount is equal to grant amount grant amount 40% of 15 lakhs. 40% of 15 lakh, that is equal to 6 lakhs. 6 lakhs. Nature of grant, nature of grant, nature of grant. Grant related to depreciable asset. Grant related to depreciable asset. Grant related to grant related to depreciable asset. DEPRECIABLE. Grant related to depreciable asset. Grant related to depreciable asset. Relevant NDAS provision. Relevant NDAS provision. Relevant relevant NDAS provision. Relevant NDAS provision. Para 24 of NDAS 20. 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 Grant related to assets shall be presented. Grant related to assets. Grant related to assets. Grant related to assets. Grant related to assets shall be presented. Shall be presented. Grant related to assets shall be presented either by setting up of deferred income or by deducting the grant from the carrying amount of the asset. Presented either A, by setting up deferred income, by setting up by setting up deferred income, by setting up deferred income, by setting up deferred income, by deducting the grant, by deducting by deducting the grant, by deducting the by deducting the grant, by deducting the grant from the carrying amount of the asset, by deducting the grant, by deducting the grant from the carrying amount from the carrying amount of the asset, carrying amount of the asset, by deducting the grant from the carrying amount of the asset. IND-AS does not permit credit to capital reserve. IND-AS does not permit credit to capital reserve. IND-AS, IND-AS, IND-AS does not permit, IND-AS does not permit, IND-AS does not permit credit to capital reserve. Does not permit to credit capital reserve. Either method is acceptable or below method shown an example. See, in the method 1, method 1, deferred income approach, DEFERRED, deferred income approach, deferred income approach, deferred income, deferred income approach, deferred income approach. Cost of machinery 15 lakhs. Cost of machinery 15 lakhs. 15 lakhs. Useful life 6 years. Useful life 6 years. Depreciation SLM is depreciation. Straight line method is 15 divided by 6 years. That is equal 2.5 lakhs per year. Grant recognition. Grant recognition. Grant recognition. Grant recognition. Deferred income 6 lakh. Deferred income 6 lakhs because 15 into 40 percentage. It's called 6 lakh. Deferred income is equal to deferred income is equal to 6 lakh. 6 lakhs. Amortized over 6 years. Amortized over 6 years. Amortized over 6 years. that is equal to 1 lakh per year to profit and loss account. 1 lakh per year, 1 lakh per year to P&L account, to P&L account. Net impact on P&L per year. Net impact. Net impact. Net impact on P&L per year. P&L per year. Per year. Depreciation 2.5 crore minus grant income 1. Depreciation 2.5 he given already. 40% subsidy to partially fund the purchase of radiology machinery costing 15 lakh. Useful life of the machinery 6 years. Depreciation on this machinery is to be charged to straight line basis. Assume nil residual value. See, now the 6 lakh divided by 6 years, each year 1. 15 into 60 percentage is equal to 9 lakhs. Now, what we are going to do, net carrying amount is 9 lakhs. Why? 15 into remain 60 percentage will how much? 9 lakhs. My batch, the 6 lakh divided by 6 years, you need to charge to P&L account every year 1 lakh. Whereas actual 15 lakh divided by 6 years, how much is coming? Depreciation 2.5 lakhs. So net impact to the profit and loss account, depreciation 2.5 minus grant income 1.5 lakh charge to be expense. Depreciation depreciation 2.5 minus grant income 1. Then 2.5 minus 1 is equal to 1.5 lakh expenses. 1.5 lakh expenses. 1.5 lakhs expenses. 1.5 lakh expenses. See how 2.5 came? The 15 lakh is an asset for useful life of 6 years. Then supposed to be depreciation 2.5 lakhs every year. But whereas 40% is grant is over there. Even if you see 2.5 into 60 percentage, that is 1.5 is coming. So exactly 1.5 lakhs only I charge to P&L account rather than 2.5 because 40% consider already subsidy. For that 40% alone, I am not giving depreciation. For remain 60%, I am giving depreciation according to India's 20. Understand? Yes. Now, For example, if I go method 2, reduction from the cost of asset, what will happen? Let's go back. Method 2, method 2, reduction from cost of asset. 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 Net carrying amount is equal to net carrying amount. Net CARRYING. Net carrying amount is equal 15 minus 6, that is equal to 9 lakhs. Depreciation 9 divided by 6 years, that is equal to 1.5 lakh per year. Per year. 1.5 lakhs per year will come. Now we'll talk about Grant 3. Grant 3, 2 acres of land received free of cost. It is the fair value of land. Grant 3, Grant 3, Grant 3. Friends, let's talk about Grant 3, 2 acres of land free of cost. To set up the hospital, the fair value of the land is estimated 15 lakhs per acre. This how I need to do. Friend, this is simple, very simple. Fair value of the land 2 acres into 15, that is equal 30 lakhs. But nature of grant is non-monetary government grant at nil cost. See, fair value of the land. Now grant 3. Grant 3, 2 acres of land received free of cost. Two acres 2 acres of land, 2 acres of land received, received free of cost, free of cost. 2 acres of land received free of cost, free of cost. Fair value of land, fair value of land, fair value of land 2 acres into 2 acres into 15 lakh, that is equal to 30 lakhs. 30 lakhs. Nature of grant, non-monetary government grant at nil cost. Nature of grant, nature of grant, non-monetary government grant at nil cost. Non-monetary, non-monetary government grant, non-monetary government grant, non-monetary government grant at nil cost. At nil cost. Relevant India's provision, relevant India's provision, relevant India's provision relevant NDAS provision. Relevant NDAS provision. Para 23 of NDAS 20. Para 23 of NDAS 20. No monetary grant shall be measured at fair value or nominal value. No monetary, underline, important, my dear friend. Important thing. Non-monetary grant shall not be measured at fair value or nominal value. Okay. Non-monetary grant, non-monetary grant non-monetary grant non-monetary grant shall be measured at shall be measured non-monetary grant shall be measured at fair value or nominal value. Measured at fair value or nominal value. Fair value or nominal value. Fair value or nominal value. Accounting treatment preferred under NDAS. Accounting treatment accounting treatment preferred under NDAS. Accounting treatment preferred accounting treatment preferred under NDAS. Under NDAS. Under NDAS. Recognized land at fair value of 30 lakhs. Recognized land recognized land recognized land at fair value of 30 lakhs at fair value of 30 lakh fair value of 30 lakhs corresponding credit treated as government grant. Corresponding credit CORRESPONDing corresponding credit corresponding credit treated as corresponding credit treated as corresponding credit treated as government grant. Corresponding credit treated as government grant. corresponding credit treated as government grant. Recognition in P&L account. Recognition in P&L account. Since land is non-depreciable, the grant is not recognized in P&L. Since since land is since land is non-depreciable, since land is non-depreciable, the grant is not recognized in P&L. The grant is since land is non-depreciable, the grant is not recognized in P&L. The grant is not recognized, not recognized in P&L. In P&L. It remains, since land is non-depreciable, the grant is not recognized in P&L. It remains a deferred income, capital nature grant in the balance sheet. It remains as a deferred income. It remains as a deferred income. It remains as deferred income. Capital nature grant in the balance sheet. Capital nature grant in the balance sheet. In the balance sheet. See, dear friend, till now, three grants we are seen. First the grant number one. It is a 20 lakhs for providing free treatment to the below poverty line resident for the 5 years. The nature of grant is grant related to income. Conditions upon rendering the medical services over a period of 5 years. Then, according to para 12 and 29 of India, grant related to income shall be recognized systematically over the period in which entity recognize the related cost. The year which you recognized the cost, that year you please recognize income also. Now, for this accounting treatment, the recognize the grant as a deferred income initially, amortized over the 5 years in the profit and loss account in the proportionate. See, it means 20 lakhs divided by 5 years, then it will come 4 lakhs per year. I will charge to my P&L account as a credit. Corresponding cost to the below poverty line, I will charge to P&L account. That's the grant 1. Now, I would like to come grant 2. The second grant is subsidy on one plant and machinery. What I do, the grant related to depreciable asset, then I'll go for relevant para number 24 of India is grant related to asset shall be presented either by setting up of a deferred income or by deducting the grant to the carrying amount of the asset. Either of the method I need to follow. India does not permit credit to capital reserve. Either the method is acceptable, either method 1 or method 2. Method 1 says that the grant is 15 lakhs, right? Then useful life 6 years, right? Every year depreciation you charge to P&L account is 2.5 lakhs per year. Because initially I recognized it cost as cost as a 15 lakhs. Now I'm making depreciation every year 2.5. And correspondingly, the deferred income 6 lakh. Why 6 lakh? 40% given subsidy, no? 40% into 50 lakhs, how much? 6 lakhs, right? How I need to recognize 6 lakh? 6 lakh I will amortize over a period of 6 years in my P&L account. Credit side. Absolutely, how much is the net impact? 2.5 depreciation minus grant income 1, that is equal to 1.5 lakh expenses to charge to be P&L account is a net impact on the profit and loss account per year. Now, I would like to come to the method 2. Method 2 says that whatever the subsidy came, you reduce from the cost of the asset. Then my purchase plant and machinery is 15 lakhs, right? And 40% subsidy, right? Then 60% is right, 9 lakhs. This 9 lakhs, how many years? My useful life 6 years. Then 1.5 lakhs is a per year. So that's it. This is grant 2 over. Now you come to the grant 3. Grant 3 speaks about 2 acres of land they given to us. That fair value is 30 lakhs. Nature of grant is what? Non-monetary grant. Then it should be treated as a nil cost. Relevant to India is para what 23. Non-monetary grant shall be measured at fair value or nominal value. Non-monetary grant shall be measured at fair value or nominal value. Okay. Now, if you come to the accounting treatment, recognize the land fair value at 30 lakhs. Corresponding credit treated as a government grant. So, land account debtor to government grant. Then, what is the treatment into the profit and loss account? Since land is non-depreciable grant, is not recognized in P&L account. It remains a deferred income or capital ledger grant in the balance sheet. Now, I would like to go for grant number 4. Grant number 4 is what? 50 lakhs open medical center backward area, no further conditions. Nature of grant is a given. Encourage the location in the backward area. No performance future compliance conditions. So according to para 14 of India's 20, the grant with no future related cost are recognized immediately in the profit and loss account. Accounting treatment, recognize 50 lakhs as a income in the statement of profit and loss account in the year of receipt. That's it, my dear friend. There is no much more complexity in the problem, but by bad luck in the examination, we are too busy in other stuff. We are not able to handle this properly. It's our bad luck. Now, my dear friend, I would like to go question number 5 here. See, in this question number 5a, let's read completely the question and then we'll go for answer. Grant Limited enter into a contract with the customer to sell the machinery. The machinery is transferred to the customer when the contract is signed. The price per the contract is 10 lakh plus. Contract rate, interest rate is 8% per annum. Payable in 5 annual equal installment, like 2 crore 50 lakh, 2 lakh 50,000 438 each. No down payment is envisaged of the sale value. Grant Limited avails loan at the rate of 10% per annum from its banker for similar back-to-back transaction. Statutory auditors of the company had advised Grant Limited to recognize the transaction price of the machinery after discounting installment payment 10% per annum and observe that the 8% contractual rate of interest significantly lower than the 10 percentage. Okay. Okay. Grant Limited avail loan 10% per annum from its banker for similar back-to-back transaction. Statutory auditor of the company had advised Grant Limited to recognize the transaction price of the machinery after discounting installment payment at the rate of 10% per annum and observe that the 8% contractual rate of interest is significantly lower than the 10% of interest rate at which company avail loan from its banker to find such transaction, determine the transaction price of the machinery of the company, accept suggestions of the statutory auditor of the company. Should Grant Limited accept to offer the customer whether the customer want to cancel the contract for payment of installment, offer offers cash price is 9.65 lakh. Present value of inflow equated amount of stream of the annual installment for 5 years discounted at 10% rate. Interest is 3.79 times of the yearly equated installment amount. Your response should be as per applicable in the years. We are talking about question number 5A, my dear friend. We are going to answer 5A. Yeah, 5A, my dear friend. We are going to answer question number 5A, my dear friend. Ankit Bharati Goswami, good morning. Have a good day, sir. Yes. Good morning. Good morning, bro. Mr. Ankit Bharati Goswami, a good morning to you. Yes, do you want to say anything? If you want to talk anything, kindly approach mobile number. Kindly. you want talk. 9677 205 265. See, Mr. Ankit Bharati Goswami, good morning. Have a good day. You can call me back. My mobile number 9677205265. We can speak elaborately. You need any assistance, my supporting hands always open. Okay, my dear friend, Mr. Goswami, let's go for discuss next question. My dear friends, I would like to talk about this question. This question is talking about India's 115 revenue recognition. How to recognize the revenue in profit and loss account? What conditions should be fulfilled? All this we are going to talk now. See, my dear friend, this is People's Advocate Siman Narayana Malila is coming and Now, my dear friend, what I'm going to talk here. My dear friend, this is People's Advocate Sivanarana Malala going to talk about question number 5A. This question number 5A speaks about a grant limited enter into a contract with the customer to sell a machinery. The machinery is transferred to the customer at the time of the signing of the contract. The consideration is payable in 5 equal installments. Good afternoon, my dear Ramesh Punifad. Good afternoon. Good afternoon. Thank you. Thank you watching me. Good afternoon, Mr. Yes. Now visible to you. Now visible to all of you. Hi, Ramesh. Thank you. Thank you. Whenever you free, call me. We'll discuss. Okay, Ramesh. Ramesh Punifat, thank you very much. Yeah, okay, Ramesh. Thank you. When you free, call me. Okay? What are you doing? Okay, Arvind. Okay, Ramesh. Thank you. We'll discuss later about that. Okay. Okay, Ramesh. Do whatever you want to do. In between, if I have got something, also I'll inform you. Afternoon, I'll see somebody if anybody is near to available to me to help us regarding to this CV. I'll check with them. Okay, thank you much. Now let's go to question number 5A. See, you look the question. The grant is limited. Enter into a contract with the customer to sell a machinery. The machinery is transferred to the customer when the contract is signed. The price for the contract is 10 lakh plus contract rate of interest is 8% per annum. Payable in 5 at 2,50,438 each. No down payment is envisaged for the sale. Grant Limited avail loan 10% per annum from its bank for similar back-to-back transaction. Statutory auditor of the company had advised the Grant Limited to recognize the transaction price of the machinery after discounting installment payment of 10% per annum, and observes that 8% of the contract rate of interest is significantly lower than the 10% rate of interest, which avail the loan from its banker to fund of such transaction. Now, for this, we need to determine the transaction price of the machinery. If the company accept the suggestions of the statutory auditor of the company, should Grant Limited to accept the offer of the customer, where the customer wants to cancel, where should Grant Limited to accept the offer of the customer, where customer wants to cancel the contract for the payment of the installment and offer the cash price 9.65 lakhs. Present value of inflow calculated, present value of inflow of equated amount stream of annual installment for 5 years, discounted at 10% rate of interest is 3.79 times of yearly equated installment amount. Your respect should be as per applicable in the AS. My dear friend, to answer this question, Grant Limited has entered into a contract with the customer to sell the machinery. The machinery transferred to the customer at the time of the signing of the contract. The consideration is payable in 5 equal installments. Our phone. అయ్యయ్యో, నేను మధ్యలో మీటింగ్ మధ్యలో ఉండి కొంచెం అయ్యే అయ్యయ్యో నోపగ అయ్యయ్యో చెప్పగా హోటల్లో ఫుడ్ మనం బీచ్కి వెళ్దామని వచ్చారు, వెళ్దాం బీచ్కి మరి. బీచ్కి ఎప్పుడు వెళ్దాం? మూవీకి తీసుకెళ్ళమంటావు, లేకపోతే మూవీ తీసుకెళ్ళమంటావు మూవీకి? భవాని చెప్పు భవాని. ఆ, ఆ. Dear friends, I'm going to lunch. Once came back to lunch, we'll continue to solve other papers. Thank you, one and all. I'm God. I'm so happy to all you connect and teach this class in between you. Thank you very much. Thank you very much. I'm going to lunch. We'll come very soon. Dear friends, I'm going to lunch. Once came back from the lunch, we'll continue question number 5 and 6. And thereafter, we are going to step in advanced financial management. There few questions are left. Today we'll over the Jan 26 paper. At any cost, By 3 o'clock, we are going to start. After Jan 26, we are going to start 2025 September paper. Once September paper is over, then we'll go for May paper. Our target is going back, not from back to front. We are going from front to back years, year by year, year by year, year by year, till whatever is available, we are going to solve it. Thank you guys. Bye. Thank you very much.